there's elements of people who are looking to trade it. I have not heard from any one client they're looking to buy a cryptocurrency at this time. But right now, I can tell you it worldwide, I have not heard from one client who said, I need to be in this.
So, what exactly changed BlackRock's mind about Bitcoin? BlackRock, a titan in the world of asset management, was actually completely against Bitcoin originally. The firm's skepticism wasn't out of the ordinary, as many traditional finance entities shared similar reservations. The primary concerns revolved around Bitcoin's infamous volatility, its unregulated nature, and the general lack of understanding surrounding its value proposition. Larry Fink often referred to it as a tool for crime, a way to pay for illicit activities. Additionally, there were worries about how cryptocurrency would fit into the broader financial ecosystem, given its disruptive tendencies. BlackRock, being a conventional and highly reputable firm, naturally erred on the side of caution, keeping a safe distance from the crypto realm. However, as the winds of the financial world began to shift, so did BlackRock's stance on Bitcoin. It's quite a captivating turnaround, one that didn't happen overnight. The evolving financial landscape, coupled with a growing chorus from clients interested in Bitcoin, started to chip away at the firm's initial reservations. What could have prompted such a conservative giant in the finance world to start warming up to this digital asset? Could the global economic distress triggered by COVID-19 have played a role in nudging BlackRock towards a Bitcoin ETF? This transition from being anti-Bitcoin to pro-Bitcoin wasn't just a whimsical change of heart. There were concrete factors and global events at play, steering BlackRock towards a new horizon. As we delve deeper into this narrative, we'll unravel the layers that contributed to this significant shift, exploring the blend of client demands, economic tremors, and the shimmer of opportunity that Bitcoin started to present in a time of financial uncertainty. The catalyst behind the change. Recently, an article on CoinDesk shed light on BlackRock's shifting perspective towards Bitcoin. It seems like the firm's clients played a significant role in this change of heart. The article hinted at a mix of factors, including global economic conditions and client preferences, that nudged BlackRock to reconsider its stance on Bitcoin. It's an intriguing peek into how external pressures can prompt even the most traditional financial institutions to reevaluate their strategies. The chatter around Bitcoin has been growing louder, especially among BlackRock's clientele. They began viewing Bitcoin as a potential hedge against inflation. Similar to assets like gold and silver, Bitcoin isn't tied to a particular economy or political situation, which makes it an attractive option for preserving wealth during turbulent times. The idea is, as inflation chips away at the value of traditional currencies, assets like Bitcoin might hold their ground or even appreciate in value. This growing interest from clients wasn't something BlackRock could easily ignore, given its commitment to catering to client needs and preferences. War and uncertainty. The global scene wasn't helping either. The conflict in Ukraine, sky-high inflation rates, and general financial instability were unsettling. Clients were searching for alternative investment avenues to shield their portfolios from these economic headwinds. The traditional markets were proving to be a rough terrain, and the allure of Bitcoin's decentralized nature started to make sense to many. With no government control and a fixed supply, Bitcoin appeared as a fresh, albeit unconventional, avenue to diversify and possibly safeguard investments. BlackRock, feeling the pulse of its clients' concerns and interests, began to see the merit in re-evaluating its stance on Bitcoin and the broader crypto space. Too much potential. As the interest in Bitcoin and other cryptocurrencies started to heat up among its client base, BlackRock couldn't help but notice the monetary potential that lay within the crypto market. While it's a market known for its volatility, it also comes with opportunities for high returns. The increasing market capitalization of Bitcoin and other cryptocurrencies signaled that there was real money to be made. This wasn't just a fleeting trend, but a growing financial sector. With the right approach, there was a chance for BlackRock to not only meet its clients' evolving needs, but also expand its revenue streams. Opportunity. Even though BlackRock was a bit late to the crypto party, it still had a significant advantage as a traditional finance firm. The realm of cryptocurrency exchange-traded funds was still relatively untapped by mainstream financial institutions. By venturing into crypto ETFs, BlackRock had the opportunity to pioneer a bridge between the traditional finance and crypto worlds. This wasn't just about catching up. It was about leveraging its established reputation and extensive financial expertise to carve out a new niche. In doing so, BlackRock could provide a structured, familiar way for its clients and other investors to engage with cryptocurrencies. Control. BlackRock's venture into the cryptocurrency space isn't solely about profit, it's also about control. Being a powerhouse in the traditional finance world, it's natural for BlackRock to aspire for a significant say in this emerging asset class. By having a foothold in the crypto market, especially through something structured like ETFs, BlackRock could potentially influence how this market evolves, ensuring it aligns with broader financial systems and regulations. ESG. Moreover, there's ESG. The crypto market has faced scrutiny, especially concerning its environmental impact and lack of regulation. By stepping into this space, BlackRock has the chance to advocate for better environmental, social, and governance practices. It's not just about adding a new asset class to its portfolio, but ensuring that this asset class evolves in a manner that is ethically sound and beneficial for the broader financial ecosystem. Then again, many view ESG as another way BlackRock places itself in control. Under the guise of bettering crypto through ESG, BlackRock could potentially steer the space further. Perhaps they could use this as a tool to ensure crypto benefits them the most, such as forcing a hard fork or making changes within mining companies. Mining has taken the brunt of the ESG criticism with Bitcoin, and miners are the ones currently in control of the network. The keyword being currently. Covid-19. The Covid-19 pandemic has left a significant imprint on the global economy, and one of its repercussions has been the spike in inflation rates. Governments and central banks unleashed a torrent of financial aid to support individuals and businesses through stimulus checks, bank bailouts, and other fiscal measures. While these actions were necessary to keep the economy afloat during unprecedented times, they also led to a surge in money supply. More money chasing the same or fewer goods and services is a classic recipe for inflation. This inflationary pressure became a growing concern, making the idea of assets that could potentially hedge against inflation more appealing. It's in this economic backdrop that BlackRock's clients, and likely BlackRock itself, began to see the allure of Bitcoin. Besides the financial measures, the pandemic also tossed a wrench into the global supply chains. Lockdowns, restrictions, and health concerns disrupted production and distribution channels worldwide. This disruption led to a scarcity in a variety of products at a time when demand was high, partly fueled by the extra money from stimulus checks. People were buying more goods that the supply couldn't keep up, causing prices to climb. This situation further exacerbated the inflation problem. The traditional financial theories and strategies seemed to be on shaky ground, and alternative investment options, like Bitcoin, began to look more attractive. The narrative of Bitcoin as a potential hedge against inflation found more ears during these supply chain disruptions and the resulting inflationary pressures, painting a different picture for BlackRock regarding the cryptocurrency's potential role in portfolio management. Consumer behavior. The pandemic also saw a noticeable shift in consumer behavior. With lockdowns in place and many services, like dining out, travel, and entertainment put on hold, people diverted their spending towards goods. The spending that might have otherwise gone to a nice dinner or a weekend getaway was now channeled into buying products online. This shift exacerbated the demand for goods at a time when supply chains were already struggling, contributing to the inflationary scenario. It was a clear deviation from the norm, and it started affecting how people, including investors, were thinking about protecting their financial resources. As restrictions eased and services started to reopen, there was a pent-up demand for services that had been inaccessible or limited for a long time. People were eager to travel, dine out, and experience the services they had missed. This sudden surge in demand put pressure on service prices as businesses tried to make up for lost time and revenue. It was another layer to the inflation issue. The ripple effects of these consumer behavior changes were felt across the economic landscape, adding to the complexity of the financial environment in which BlackRock and its clients were navigating, and making the conversation around Bitcoin more pertinent. Monetary policy. In response to the rising inflation, the Federal Reserve took the route of increasing interest rates, a common tool used to curb inflation. By hiking the rates, the aim was to cool down spending and borrowing, thereby slowing down inflation. However, these hikes also mean higher borrowing costs for individuals and businesses, which can have its own set of implications on the economy. This monetary policy response was a key aspect of the broader economic dynamics during this period. Amidst these moves to control inflation, the quest for alternative assets like Bitcoin that could potentially offer a hedge started gaining more ground, nudging BlackRock closer to the crypto domain. COVID as the underlying catalyst. The economic landscape during and after the COVID-19 pandemic has been nothing short of complex. As we've seen, the inflation surge, changing consumer behavior, and monetary policy responses were all intertwined with the pandemic's impact. This whirlpool of economic events created a scenario where traditional financial strategies were put to the test. Now, let's hypothesize for a moment. Without the economic ripples caused by COVID, would BlackRock have ventured into a Bitcoin ETF? It's tough to say with certainty, but the likelihood might have been lower. Pre-pandemic, the discourse around Bitcoin and other cryptocurrencies was already brewing, but the urgency and the widespread interest catapulted significantly in the face of economic uncertainties triggered by COVID. The pandemic, in a way, fast-tracked the discussions and considerations around alternative investment options like Bitcoin. BlackRock, being a client-driven firm, responds to the evolving demands and concerns of its clients. The amplified interest in Bitcoin as an inflation hedge, spurred on by the economic challenges of the pandemic, made it almost imperative for BlackRock to reconsider its stance. Without these economic pressures, the urgency and the client demand might not have peaked to the level that would prompt such a significant strategic shift from BlackRock. In essence, while BlackRock's venture into the Bitcoin ETF realm might have been possible down the line, the economic tremors caused by COVID certainly played a catalyst role, accelerating the discussions and actions towards this new investment frontier. So was COVID the reason for BlackRock's pivot on Bitcoin? We think so. It became too good of an opportunity for them considering their clients' demands. Larry Fink went from hating Bitcoin to being completely orange-pilled. We can't blame him. Now let's see what this all means for Bitcoin's price. Thanks for watching and don't forget to subscribe. See you in the next upload.